Hello, everyone, and welcome to another Yieldstreet Athena webinar. We're going to give attendees 30 seconds to get settled, and then we'll begin. While we wait, I have a couple of housekeeping items to run through. First, be sure to visit www.yieldstreet.com to learn more about our offerings and sign up to receive the latest updates. And second, we will be answering questions for the last 10 minutes of the webinar, so please submit any questions that you may have through the Q&A button. Thanks so much for taking the time out of your day today to join us in a discussion of what lies ahead in the global art market and the art lending industry. Today, we'll be talking about the impact of the changing landscape of galleries and how they will affect both the auction markets and the business of art given the transition through the COVID period. The structure of our conversation will be candid and forum-like, so I encourage you to drop your questions into the Q&A box. I'll do my best to make sure all of your questions are answered, but if I do miss anything, we will get back to you shortly after the webinar via email. In case we haven't met before, my name is Cynthia Sachs, and I'm the Managing Director and Chief Investment Officer of Athena Art Finance, and it's such a pleasure to host this webinar today. I'm incredibly lucky to welcome our guest, not only to today's show, but to the company as he recently joined our team. Today, I'm joined by Noah Kupferman, our new Director of Business Development at Athena Art Finance. Noah, welcome to the show.
Thank you so much, Cynthia. Thrilled to be here, thrilled to join the team. Very excited about it, so thanks so much.
Yeah, we're thrilled to have you here. We've known each other, right, for quite some time, and it's so nice to have you working with us on board at Athena. So let's dive right in. So Noah, please start by telling the audience a bit about your background and how you came to join Athena and our Yieldstreet audience today.
Sure, of course. Really, my career over the past 25 years, I've spent part of it on the finance side and part of it on the art market side. So it's really been straddling these two worlds. And for this reason, I feel like I'm just so thrilled to join Athena because it's really, Athena is a sort of a professional version of what my background has been, both the art and the finance. In terms of my background, I started my career way back when at Sotheby's, the auction house here in New York, where I trained as an art specialist, actually in Chinese art. And then left Sotheby's to go to business school, studied finance, and spent the next 15 years in wealth management and banking at various institutions, Merrill Lynch, US Trust. In 2012, I had an opportunity to circle back and come back to the art world, the art market, where I joined Christie's, one of the world's leading auction houses, of course, where I had several different positions, managerial positions, and business development roles. So I feel like I'm ready to join Athena now, and I'm happy to do so.
Yeah, well, we're so happy to have you, and that's excellent. And the reason why, obviously, we had you join our team, it's so impressive, your background, steeped in both art and wealth management. I guess is that what drew you to art finance?
Yeah, for sure, actually. Ever since my wealth management and private banking days, I've really been intrigued with this connection between the art market and financial market. From the outside looking in, it would appear that art and finance have very little in common. And indeed, of course, there are many different ways in which they're different. But yet what I've found is that there are many aspects between them that are in fact overlapping. And I find that really interesting, not least of which, quite honestly, are the art collectors themselves, many of whom are from the finance world. And so being from finance, they understand leverage quite well, and therefore understand our business quite well, and the need for our business, and what we can offer them.
Right.
Honestly, though, what I find really interesting is that this overlap between art and finance is it's not something that's very new. In fact, we can see evidence going back to this connection in art banking back to the 14th century, the very beginning of the Renaissance period. So
amazing.
That's actually quite fascinating.
Great, that's amazing. That's amazing, actually, because, and it's interesting, right? because if we look at recent headlines in the art market, what we saw last week was kind of something very similar, right? We saw a record auction, a $92 million Botticelli sale, a young man holding the rondelle, who lived in the 1400s, speaking of going back to then. And Botticelli was one of the most celebrated, or is one of the most celebrated painters of the early Italian Renaissance period. And for those who may not know, he's most well known for the Birth of Venus painting that's very, very, very famous. But speaking of that, the auction of that Botticelli, what did occur at Sotheby's, and must have been a huge lift for them, right? A $92 million sale, after their December 2020 auction. So kind of coming off of maybe a bit of a less, spectacular, I'll say, auction. And Noah, just kind of speaking about that, I'm curious to know what you think about like these record $92 million prices for one artwork. What the impact that will have on the auction prices going forward, if any. I mean, it's one piece, but it still, makes a major statement in the market.
Oh, yeah, for sure. Absolutely. That piece in particular at Sotheby's was a masterpiece. It was a masterpiece by a very, very important artist from the Renaissance period, as you mentioned. I think that regarding what we can kind of glean from the Sotheby's sale is really, clearly this demonstrates that there's a lot of strength at the very top of the market, the very top of the art market. And I think what we can predict from that is to think that, well, from sales like that, the top of the market has remained strong. Even in light of difficult economic circumstances, the top of the market is strong. Now, a sale of that magnitude would say less about, say, the middle of the market and the lower end of the market. Right. And so, quite honestly, to be clear about it, this is really telling us something very interesting, quite honestly, about the market that we look at. So for us, it's quite enlightening. I think one of the things that's really interesting about this sale in particular is that it demonstrates something interesting and particular about the nature of the art market itself and the way that it functions. So, for example, the first thing that I would note is that it really, this such a strong sale, such a strong showing, which it was a record price for this artist by magnitudes. I think the previous record was something in the range of $10 million at Christie's. It reaffirms the idea of a global appetite for trophies in the art world. And so what I mean by that is that regardless of economic cycle, we've seen this over and over again, even in financial difficulty, times of financial difficulty, the art market continues to achieve strong pricing at auction for the very highest quality of work. And so that's something that's interesting. So in a sense, you can call it sort of counter-cyclical in a way, I suppose, if we want to sort of put it into financial terminology. The second aspect that I would say about the Botticelli sale that's interesting, that leads us to some interesting conclusions about the art market, is that the supply-demand characteristics of the market are such that the market is really driven by supply. We know that the demand, when and if high quality comes out, the demand will be there for it. And so we've seen that in this case, we've seen it at Sotheby's, we've seen it in other cases. And, the other aspect about this picture, this painting, is that supply demand, to speak of the supply of Botticelli portraits, this painting was only one of 3 Botticelli portraits that was held in private hands. So what that means is everything else is in a museum. Everything else is not purchasable because a museum is not going to sell it. So what this tells us is that when really, really high quality supply comes out, the market will appreciate that and it will achieve high pricing. The final piece I would just say is that it really demonstrates the global aspect of our market, which is to say that the seller, the consignor, is from New York, a New York real estate developer. The winning bidder, the purchaser, is from Russia. And we know that the underbidder was from China. So it really sort of highlights the global nature of our market, which is interesting.
Yeah, no, I think that's absolutely right. I also think that the kind of the K-shaped recovery that we're seeing, this kind of bittersweetness of, kind of the wealthy getting wealthier, and the other extreme in the lower leg of the K. I think this is a prime example of that. And that is what's happening globally, particularly at that part of the market. And also, just so our audience knows, in terms of kind of the liquidity that we're seeing and the scarcity value of this piece particularly, this is where Athena really focuses our our lending and our kind of our data analytics that we kind of talk about, kind of throughout many of these webinars, as you've heard, really try to hone in on not this one spectacular scarce piece, because this is definitely more of an outlier. But there is a portion of the market, namely the blue chip part of the market, where we do really focus because, as Noah was saying, obviously there's clear liquidity. At the high end, you would think, how many bidders could you have for multi-million-dollar pieces? But if they are the right pieces, there is liquidity. And then I would just add that, and that obviously protects our investors in a downside case when we're looking to, in a worst case scenario, have to sell the artworks and want to make sure we can get full recovery. So that's important. And then just to add, Noah, the global nature, as you mentioned, Athena does do many cross-border deals. It's something that is part of our business because the art market is global. So, we do focus there and know that we need to be smart around how to do that. And, it's part of our business model. So,
yeah.
Yeah. So listen, that's a perfect segue into actually the topic that we kind of, opened with, which is, the galleries and, with that, the art fairs and Noah, as you know, they continue to be canceled, right? We're kind of starting to see that again, which is a repeat of what we saw in 2020. So unfortunately, this is like a running theme that we're seeing. And obviously these fairs and the galleries have to now adjust. So, I'm curious what you think about this segment of the private part of the market, right? The auction market, as we kind of just talked about, is public. We have transparency there, but this is the private part of the market, which is also very important, kind of equal in the transaction volume. So, Noah, what do you think about this? Like, what's your view on these art fairs and the galleries?
Sure. Yeah. No. I mean, it's given the ongoing global health crisis, the art market calendar continues and remains to be in flux. Fairs, exhibitions continue to change their dates, optimistically hoping to have them at a later date. As you can see on the screen, Art Basel, Switzerland, generally they actually just announced that generally it's in June. They're going to be having it in September in Switzerland. They've also announced bumping back the Hong Kong sales, which usually happen in March, and now they're optimistically hoping to have them in May. TAFAF, the European Fine Art Foundation, postponing until September. They've actually postponed New York until spring 2022, and Expo Chicago delayed until further notice. So these are this is tough. This is really a difficult. The art market is not the only market, of course, that's going through tough rescheduling and things. But what's interesting and I guess a little bit strange is that it's been somewhat bittersweet for the auction market in that the loss of fairs has meant that there's more art, there's more property to come to auction, and we've seen that the auction houses have benefited somewhat. They have had difficulty as well because of the pandemic, but they've benefited from the fact that there haven't been as many fairs, to be sure. Now, to some sort of background context to the closing down of fairs and the reshuffling of the calendar is that previous to pandemic, there were something in the neighborhood of about 300 art fairs throughout the world. Now think about
incredible amount.
It's unbelievable, really. You think about 25 years ago, there were a handful. Right. And now, so there was almost an art fair every day. And so that is, it led to this idea that, are there too many the art market a constant refrain was talking about fair fatigue. It's just too much. People didn't want to go so much. And the thing is that really, quite honestly, only the highest level of like the blue chip galleries could really afford that. It's very expensive to go for a gallery to go to Art Basel in Switzerland, the booth costs and the travel and the shipping and everything. So it's really what, optimistically, perhaps what we're seeing is a correction, and maybe a resizing, so that, to be sure, it's been a difficult time, but what we're expecting, and hopefully soon we'll all be able to go out and go to fairs in person and go to exhibitions in person. I expect what we'll see is a more slimmed down schedule. It's not the end of art fairs for sure. It's an important part of the market, but I think we won't see as many.
Yeah, that makes complete sense. So just kind of like moving on from that, and particularly given COVID, just kind of talking a little bit more about the galleries, right? We know, many of them have been struggling. The gallery market has been highly fragmented. As you just mentioned, 300 art fairs, in a year is a lot. So a lot of oversaturation, in that regard. And their businesses have been hit really hard by COVID. Many of the galleries are either closing, unfortunately, or forming consortiums or partnering with their historically fierce competitors, the auction houses, right? The major auction houses, very much, kind of kept to their wheelhouse, and the galleries did their thing, and now they're coming together. So in some regards. So how do you see this playing out as this landscape changes, for art and the art finance market?
Sure. Yeah. What's the expression about things making strange bedfellows? We've seen, because of COVID, throughout this pandemic, we've seen really a surprising number of partnerships, surprising in the number of partnerships and surprising in the partnerships themselves. And so, as you're suggesting, out of necessity, we've seen galleries teaming together, competitors teaming together. And so celebrated example of that we saw in the spring was when there were 3 galleries. The celebrated collector had passed away, and the family of Don Marin, either through auction or through private sale in galleries, and it went Aquavella, Gagosian, and Pace teamed up, which is sort of like the Yankees and the Red Sox and some other team teaming up. It just doesn't happen. But out of necessity, that's what they've done. We've seen partnerships between auction houses themselves. There's a really interesting case where Phillips, the auction house, one of the oldest and most established auction houses in the world, has teamed up with Poly Auction, which is the leading auction house in China. And over the past, about a couple of months ago, I believe it was, they had a joint sale in Hong Kong. We've seen partnerships between galleries and auction houses. Sotheby's announced in the spring the Sotheby's Gallery Network, and even auction houses and art fairs have teamed up. There's an example in Paris where Christie's teamed up with the Paris Biennale. So it's really interesting. We have a changing landscape. We have almost a changing paradigm going on now. And it presents a really interesting opportunity for us at Athena, I think. Look, I'm new, but for me, I from the outside looking in, and now from the inside, being working with you and the team, I think that Athena is in a really interesting place now to be able to provide liquidity for galleries, for art market players to achieve a variety of goals, which is really interesting. It could be working capital. It could be to expand their footprint. It could be to upgrade, improve technology. It could be changing business models, and perhaps even an opportunity for Athena to be involved with acquisition financing to collectors through galleries. So I just think it's a really exciting time, and there's a lot of upside.
Yep. I mean, absolutely. We're very excited. On the other side of the equation, as you talk about the galleries and kind of consolidation and the changing landscape, one of the things, is that these sales are happening now more online, whether they be, in partnership with the auction houses or other kind of online venues through the art fairs, et cetera. And like we think about how does that benefit art finance? How does it benefit Athena? And really, it's important because again, I'll mention 50% of the market is public through the auction houses essentially. Obviously the other half is private. And so as more comes publicly, there's more transparency, right? And there's more pricing data. And that gives us at Athena, greater visibility into the market to make our investment decisions. Also, as we see more activity, right, and the market kind of the depth and breadth of the art market widens, right? You're able to really get a better understanding of true value in terms of comparables, et cetera. And that's obviously very important for everybody in the market. I think it's healthy. The business models, particularly at the auction houses and the galleries as they come together become more efficient and synergies are realized. And it just makes for me, having been in many, kind of looked at many different business models, given, my background in finance, it really for the art market makes the business much more attractive, stronger, more efficient, more effective in their ability to scale their businesses. And quite frankly, it's a very, in my mind, healthy development. And it would be for any market kind of going through this major transition into kind of the 21st century, which, the pandemic kind of forced upon them, as we've talked about in the past. So it's really an exciting time. And, I think one of the beneficiaries, particularly that we saw at the end of last year, you just mentioned Philips, who's generally known to be the third, kind of player in the market in terms of size. But I mean, they hit the ball out of the park in their, December auctions in New York. And it was just like, we said it, in the past, it was just a breathtaking sale. And, it really just shows, while there's small shifts, this to me was like a major move in the market to see Philips just do so well. And it just also plays into the fact that there's a lot of jockeying going on, right? So don't rest on your laurels, right? Being, maybe one of the bigger players, wherever in the space, galleries, auction houses, because everyone's on each other's toes, right? Or heels, I should say, from a competitive perspective. So I think it's a very exciting time, for the market. So I'm not sure if, what your view is also on kind of, this whole shifting that we're seeing.
Yeah, no, I agree. I think, some of the things, a lot of the things that have been happening over this past year that have been really exacerbated or really precipitated by COVID. There are some of these trends have been going on very slowly in the art market for a long time, and we've been waiting. And one of the really perfect examples is what you're talking about, the data and transparency. And so it's really because by necessity, galleries on the private side started posting pricing data, for example, because they had to, not because necessarily they wanted to. And so now, because of that, now we, the market, are the beneficiaries of that data, because more data means more transparency. More transparency means perhaps more trust in a more robust market, more liquidity. And so for us, I think we're in a really interesting place right now. I think, after, please soon, the everything will be back to some sense of normal. And there are a lot of aspects of the art world, of the art market, will go back to the way they were. I don't think this is one of them. I don't think transparency and data publication and accessibility is going to go back to the old days. So I think, and one of the things that I've always found so interesting about the Athena business, before that I was even part of it, is this reliance on data. Because that's very unusual. I don't know, if people know that about the art market. That's very, very unusual in art finance and in any part of the art market. Is that there's reliance on data and making doing the due diligence and being very disciplined about the approach. So that's
and I thank you for saying that, and listen, coming out of other asset classes and bringing all of that to Athena to build an art finance business. I mean, it's important wherever you invest, right? And so it was just something that, wasn't even a thought of would we or should we. It was like we must, because that's how other investments are made. No one makes an investment like this,
Right.
they make it with real research and analytics behind their decisions, in the investment world or in the finance world. And so, yeah, I mean, we obviously spent a lot of time and effort on that to make disciplined decisions so that we're able to make them confidently, right? With that
Right.
data.
Yeah, for
behind.
sure.
Yeah, and listen, I would just add that I agree with you 100% that the auction, market and even the galleries now coming more into the public view can never go back, because it's just they were so late to the game as it was, and now that they're here, and listen, private dealing and private trades is always better for the dealer, because more opaqueness, the more profits you could make, right, in their trade.
Exactly.
But it's a very short-sighted view, because you might be able to make a lot out of your trade, but you're not going to make a lot of trades where if you open it up to, you'll make some trades, right? But if you open it up to the market and be transparent and open up the marketplace, you'll have way more trades, even though they'll be at a lower margin. And that will benefit everyone in the long run. So I think you have to have that positive view and on the market, even though margins might get squeezed a bit, because in the end, it's going to be healthy to bring buyers into the market, and sellers also, right, feeling more comfortable they're going to get the right price when they sell.
Yeah, for sure. Yeah, and I think we're really in the baby steps of that now. So it's very, very interesting. It'll be really fascinating to see how this develops and how we can help it develop, quite honestly. So
exactly. Well, that's great. Well, thanks so much, Noah. We are so thrilled that you've joined our team. We're so thrilled that you were able to be our star on the webinar today.
Thank you.
And we're so happy that you're with us. And so before we go, we want to take a few minutes to open up the Q&A. And I know, Noah, you might have some questions in front of you, so happy to field them.
Sure. Yeah. No. We have a question online, and I'd like to turn the tables on you and ask you this question. I think this is an interesting question coming in. Given the UK position with a 13.5% tax on art sales since January 1st of this year, do you see the US picking up more auction from the main players?
Interesting.
That's an interesting question.
So I'm assuming this might be a Brexit type related question. And we have done a bunch of research on this. That is possible. Also, there's talk of the art market shifting more into Europe because of the taxing. That is one theory, that it will shift, maybe more towards New York. There was talks of it moving more towards like Paris and other kind of like continental European jurisdictions as well, and growing that market. But then there's also this theory, and we'll see obviously how it plays out, that it will all kind of equalize over time. And so it won't be as much of a disadvantage as I think people think today, because there'll be ways to kind of normalize it. So I don't know precisely, right, what exactly is going to be, but I think initially, yes, we might see some movement. But I think that, it'll kind of sort itself out, as these kind of cross-border kind of tax situations, kind of structure themselves and unfold.
Yeah, no, I agree. I think it's really interesting. Up until December 31, I was with one of the big auction houses, and I can do that has been discussed a lot at the various highest levels of the company. I mean, I think that what I suspect that we'll see is on the individual level, the individual basis. Look, if I'm a UK seller and I know that there's going to be a greater tax liability, if I can sell it in New York rather than London,
right,
and I can avoid a certain kind of tax, then for sure I'm incentivized to go elsewhere to sell. I think we won't see such an effect on the bottom line of the company of Christie's, Sotheby's, Phillips, because of course they're active in London and New York and in Hong Kong and all over the world. So I think probably what it'll be sort of a shifting around of accounts. So New York might benefit to UK's, at the loss of the UK, but the bottom line of the entire company will be, more or less the same. That's probably what I think may happen, but we shall see.
Shall see. It's early stages.
Yeah.
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 Okay. Are there any other questions?
So that's all we have in the lineup at the moment. Happy to chat more though.
Okay, we'll give it one more minute. Maybe there's some other questions coming in. If anybody wants to ask a question to Noah or I. No, nothing, Noah?
Nope. Someone just said congratulations. Thank you very much.
Thank you very much.
That's not a question.
Okay, well, thanks everyone. Thank you for that, and thanks for joining. Please visit us at www.yieldstreet.com to learn more about our offerings and come realize your next level with us. And if you're an originator, please be sure to click through our capital raise page and reach out to our originations team at originations@yieldstreet.com. And stay tuned as we release more content on a regular basis. And we thank everyone for joining, and stay safe and healthy. And thank you, Noah. Great job.
Thank you, Cynthia.
Thank you.
All right. Bye-bye.